Hey, this is Justin with DayTradeTheMarkets.com on Monday, June 24th. We had a pretty nice rally in the crude oil market today, and I wanted to do, instead of just looking at a chart after the fact, and I didn't do a video of any live trades today, I thought I would just kind of do a replay of the crude oil market today and just talk about putting the market in context as it's developing and talk about the thought process and the decision-making process of making sense of the market. So it's not so much about what happened, but more about the thought process that goes into it. So hopefully this will give you a decent understanding. But heading into the day, we like to look at our bigger picture bias, and the crude oil market's been pretty mixed over the past few months, but over the past several days we've had a pretty good sell-off, and so and we're near some recent lows, and I think that heading into the day you could quantify the day as bigger picture bias being down, or all things equal you'd rather be on the short side, in other words. So looking for reasons to get short, and if you're going to get long, wait for some pretty clear evidence, and that's what ended up happening, and I want to talk about that. But anyway, if you're fighting the bigger picture bias, which is down, and then you're thinking about getting long, know that you're either against the grain a little bit or swimming upstream, however you want to say that, and that you need to be a little bit careful and nimble with that trade, or wait for some pretty strong evidence that bulls are really taking over. Okay, so that's kind of the thought heading into the day. And then if you can get some situations where you have some good evidence that sellers are in control, that's going to give you some confidence to be on the short side. So with that said, let me just go ahead and play the replay here a little bit after 9 o'clock here, early in the session. And I'll just kind of forward this, kind of go fast until we have till we get some decent evidence to talk about, and then I'll pause it and talk about that. And again, this is a 2-minute chart. Let me pause the video there. So again, we've just started. It's a little bit after 9 o'clock Eastern time, and again, this is a crude oil chart, 2-minute chart. That's the time frame I like for day trading on crude oil. You can use this on literally any time frame. So if this is too fast or too slow for you, that can be adjusted. But anyway, this is our first, what we call, major structure of the day, and it's what we call a level 2 selling aggression bar. This is from Friday. So we basically started today. I could actually make that a little more clear, although I want to make it viewable. But anyway, this is our first structure of the day. It's a level 2 selling bar. That's telling us there's some strong selling aggression at that point. Now it happens to be into the support zone from Friday, which was basically Friday's low. And so we use that with a grain of salt, but it's our first structure. And so what we ask ourselves in this situation is, number one, can we get some follow through below the low of that bar, and can the high of this bar hold? Okay, so in other words, our expectation would be that the high of this bar would hold. If sellers are going to maintain control, then we would go test the low and make new lows. That would be our expectation if sellers are in control of this market. So certainly as an aggressive entry, you could certainly put in a limit order to be a seller right here, with the context of a bigger picture bias being down. That's one option. That's a little aggressive, certainly, but that is certainly an option. So with that said, let's just draw a line here across that bar, the high of that bar, and kind of look at what happens at that point. So I'll forward this again and have a look at this. So again, I'll speed this up a little bit. So we test the low of that bar. You can see our filter here turn red, with the thought process that all things equal, shorter term, that bears are a little bit more in control. So that certainly matches up with our expectation. That bigger picture, we were looking for a reason to be short, and our only evidence to this point is some selling aggression. So you can see here, I'll just pause it right there. You can see here we did test into the high of this bar. We even decelerated, which means that the level of buying aggression in this bar that had a higher high than its prior bar actually decelerated. So all things equal, that's telling us the market should turn around, at least in the very short term at that point. And the fact that that's in conjunction with a level that should act as resistance, and that it's in conjunction with a market that all things equal should want to go down, means this is a decent spot. It's a little bit aggressive, but a decent spot to be looking to get short. Okay, so we'll with that as a framework, we'll just kind of move this forward. And if you do get short in this situation, the first expectation would be that we would at least test the low of this bar. Okay, so that's kind of our first expectation. That you could see that happen pretty quickly. So if you were in a trade, you'd probably want to scale out of it at some point, or maybe that's just your target. That's fine. But that's kind of the thought process at that point. And the expectation at this point is that this high should hold, and we're likely to go make new lows for the day. However, things are changing a bit, as you can see at this point. And you see that we get right here what we call a level 3 buying aggression bar, as excuse me, as well as what we call a high velocity move. So this blue box here is what we call a high velocity move, and then this dark blue bar is what we call a level 3 or extreme buying aggression bar. Okay, so that's a little bit contrary to what we were expecting. We expected the high of this bar to act as resistance, and it certainly did, and it sold off and kind of met our first objective on that. But then you can see we get this buying wave, which you would basically classify from the low of this high velocity move through this level 3 buying aggression bar. That's telling us that buyers are starting to show a little bit of strength. So what do you do as a trader at this point? Do you just get long because you see a level 3 buying bar and a high velocity move? Well, if the bigger picture bias were up, then that might make some sense. But that's where the bigger picture context comes into play. The fact is, the bigger picture bias is more down in this market today. So you really want, at least in my opinion, you don't want to be too aggressive with this. If you were looking to get long, you could certainly look to do so toward the low of this buying wave, this high velocity move. That would certainly make some sense, but you'd want to make in other words, make the market prove that buyers are really in control, because it's against the context bigger picture. Okay, so a few ways to do this is, again, if the bigger picture bias was up, you might just get on board, or buy at the low of this level 3 bar, or buy at the low of the start of this buying wave, this high velocity move. Okay, but since again the context of the market is down, in my opinion, you really want to see some follow through. You want to see, if we go back to this idea of what are our expectations, we would expect the low of this buying wave to act as some support, and for buyers to really be in control, we'd like to see the high of this buying wave essentially get taken out. Okay, so that's kind of the thinking at this point. And again, if the bigger picture bias was up, you would be more aggressive, but since it's against the context of the bigger picture bias, you'd want to see a little bit of proof. And kind of what I'm thinking in this situation, if the bigger picture bias is down, I'd actually like to see this fail. I'd like to see this level 3 buying aggression bar get taken out, and then this high velocity move get taken out to the downside. If that's the case, that's telling me bigger picture bias is down, our attempted move higher by bulls has failed, this thing's going to sell off pretty hard. But I don't want to jump the gun either way. Okay? Hopefully that makes sense. So let's roll this thing forward again, and I'll kind of go in faster speed. Let that thing roll. So here's a level 2 selling aggression bar. That's going to give you a little bit of pause, like sellers are stepping in. The market's auctioned high enough to attract some selling. But again, until this basically we've got a consolidation is what's happening here, and you can see that by the high of this zone, this red resistance zone, and we've got the green support zone down here. What we're saying is we've had a move lower by sellers. It essentially worked out, but then failed. Now we've had a move higher by buyers. Haven't had any follow through higher. So at this point, we basically want to see, can the market, now we've got some support down here, but can the market break lower and get out of this consolidation and look for a vertical move lower, or can the market break through this resistance area up here, showing us that this consolidation is over and we would expect a vertical move higher? Okay. In the meantime, when you've got consolidation, you don't want to be looking to be a trend trader. You'd want to be looking to be a fade trader. So if you're thinking about a long, which again is against the grain, you'd be looking to fade in this area, this green resistance zone. We've got consolidation, so buying at the low of consolidation makes sense. Now, granted, it's against the bigger picture bias. And conversely, if you've got consolidation, selling at the high of consolidation, fading the high of consolidation makes sense. And you've kind of got a nice visual showing you the consolidation zone as that happens. Now, this happens to be in line with the bigger picture bias. So being a seller would certainly be a little up in this zone, would certainly be a little bit, more palatable than being a buyer down here, although it certainly has worked out to this point. Okay, so hopefully that makes sense. In other words, we've got context of the market where we've had a move lower by sellers early in the day with no follow through. We've had a move higher by buyers with no follow through. That's telling us this market's two-sided. It's consolidated. So when a market's in consolidation, you want to sell the highs of consolidation or buy the lows of consolidation. If something changes and we get some a breakout one way or the other, then you want to change your strategy. And this is kind of the stuff that we talk about putting the market in context. You want to change your strategy to be more of a go with type trader. So if you can see right now, we're just back and forth between at this point in this consolidation zone. Okay. If we get a breakout lower, then you're looking to ride that wave shorter. If we get a breakout higher, then you would consider taking, looking to ride that wave higher. In consolidation, you just want to be kind of a player on the edges, okay? Whether that's being a fade trader or waiting for a breakout one way or the other. Does that make sense? I like to say kind of the action is on the edges. So if you have an area of consolidation like we've got pretty clearly defined here by the support and resistance zone that show up with the software in real time, then you know you've got an area of consolidation and you just want to kind of be a player on the edges, at least in my opinion. Now certainly, I mean, you can jump on board when you see these are level 2 bars and level 1 bars. That's giving you some information, but again, your best trade location is to be a buyer in this zone or to be a seller in this zone. Okay, or wait for a breakout one way or the other and then ride that wave. Okay, let me make this a little bit faster here. So again, it's about noon Eastern at this time. The market's in consolidation. It's a two-way market. Okay, so again, you know that if you're looking at this and you're studying it, you're not going to get your head chewed off by trying to be a trend trader in this environment. You're going to wait for evidence that there's a breakout, and you're not going to you just want to be careful in this situation. So now we're testing the highs. Okay, now you can see here, let me move this down a little bit. You can see here that we're at this point trying to break through this consolidation, and we do so on what we call level 2 buying aggression bar. You can see our filter has gone to green. Okay, so it's telling us this market has basically withheld the lows of this consolidation. Even though our bigger picture bias heading into the day was down, so far the bulls have proven their merit. They've withheld this area of consolidation, and now they're trying to break out higher. So there's a couple ways to go with this. Again, you could just buy the breakout, or you could, if we get a little more time and a little more volume and a little more extension, this red zone will turn to green, and that's telling us basically that we're out of consolidation and this market should want to head higher. So again, I'm just trying to walk you through the process of making sense of this on a pretty easy to understand example, in my opinion. Okay, so again, we're trying to break out of consolidation. The filter is starting to go in our favor. If this thing turns over to green, that's telling us there's a bit of a green light that you want to potentially get on board a breakout or a go with or a momentum type of a trade. In other words, the market has shifted from more of a consolidation phase, from more of a I'm sorry, this is not working. From more of a consolidation phase in here to potentially more of a breakout phase. Okay, so that's the thought process. Now, if this fails, then the expectation, and this doesn't turn over, the expectation is we're probably going to go test here and maybe even break out lower, in which case we would have a vertical opportunity on the way down. Okay, hopefully this makes sense. I know, if you haven't gone through the training that we do, it might not make total sense, but hopefully you're following along to some degree. So let me run this forward. Okay, so we've got, I'll play this a little bit faster here. Okay, so now you can see here, let me pause it. You can see what has happened here. We've got a scenario where this resistance zone has turned green, telling us that it's no longer resistance, it should now be support. You can see our filter's gone to strongly bullish. Okay, so it's telling us that, again, what was at one point consolidation now appears to be a situation where we're going to have a vertical move higher. So how do you play this as a trader? Well, it's against the bigger picture bias, so you could say, I'm not going to play it at all. I'm only going to be in conjunction with this. I don't think that's necessarily the right move, because we're getting evidence that selling has failed so far today and buyers are really starting to assert themselves and be in control. You may want to be a little more cautious or a little more nimble, or make sure that if you get into a trade, it goes in your favor pretty quickly. But I think what the evidence is showing you short term is that bulls are starting to take control of this market. So how can you be on that side? Okay. A couple of ways. One is you just wait for a pullback to the support zone. That's kind of the simplest idea, and there's a lot of logic with that because again, the low of a level 2 bar should, all things equal, act as resistance, or excuse me, as support. We've got this green zone, which should be support. We've got this dark green filter at this point. It's telling us that the side to be on is certainly more bullish than bearish. So that's a pretty good area of trade location. Or you could just jump on board on a breakout style trade. Okay. Now, if the bigger picture bias was up and I had this kind of structure, I'd be more inclined to wait on or to go with the breakout trade. But because the bigger picture bias is down, in my opinion, it makes sense to have a little more discretion and maybe wait for a pullback. Okay, just again, how do you assess risk versus opportunity? But that's kind of what I'm seeing at this point in a day or with this type of structure. So let's go ahead and play this again, and we'll run this a little bit faster. Okay, you can see we've got a little deceleration. It's telling us the selling is decelerating a bit. Short term, it should move higher. And if you're going to get into a trade, then your stop simply needs to be 5-10 ticks below the low of this support zone. Okay, because again, you want to give it enough room that you get a chance to take part in the trade before you're actually wrong. So until this thing would fail, this green zone would fail, you want to be in this trade. Okay, so at this point, you see we have some strong evidence that's coming into the market here. We've got a high velocity move, a level 2 buying bar. If you got in right here, all the better. If not, you can see the bulls are really in control. Here's a level 3 buying aggression bar. So if you're in this trade, you're thinking at a minimum you want to, keep moving your stop up a few ticks below the low of these level 2 and level 3 bars, okay? So that's, kind of your thinking at this point. We've got a nice bullish wave. That was our expectation. Let's keep moving our stop up. And try to hold this as long as possible until there's actual proof that some bears are coming into the market. Okay, so you can see we've got a really nice move that we've taken part of. You can see the evidence that developed. We had consolidation. We broke out of that. A low risk way to get in. That's just kind of the thinking process that you want to go through. Trying to make sense. It's a puzzle. You're trying to make sense of what the market's trying to tell you. Another way of looking at that is just to ask yourself, what's the market trying to do, and is it doing a good job? If it is or if it isn't, that's giving you information that you can then use to make sense. Okay, so you can see, at this point, we have you can see, let me pause this. Since this buying wave began, since we broke out of this consolidation, we went vertical, this is our first selling evidence that we've seen, okay? So, whether you want to get out or not, it's at least a reason. It's telling, and the day is almost over at this point, but it's our first sign that there's some actual selling in the market. So you don't have to bail before you see that. You don't have to bail based on your gut. You don't have to bail based on fear. You simply hold until you actually have some evidence that the reason you're in the trade is no longer valid, or that some selling has come in this case. Okay, hopefully that makes sense. I realize this video is getting a bit long, so I'll cap it here, but or I'll close it off here. But that's, again, it's not so much about this day or this market or whatever. It's more about the thought process. What's this market trying to do? What's the evidence telling us? Is the market consolidating? Is the market two-sided? Or is the market breaking out? Is the market controlled by one side or the other? Okay, and how does that fit in with the bigger picture? If you kind of learn, and this is what we talk about all the time, if you learn to think about the market in those terms, you put the odds in your favor to a great degree. Instead of just following some indicator, instead of just following some oscillator or moving average or whatever, that's just telling you what has happened. This is helping you see and trying to make sense of what the market's trying to do from a market understanding perspective, okay? So that you can stay off of the wrong side, so you can get into the right side, so you can hold winning trades longer, so you can bail on losing trades sooner. That's kind of the name of the game. Increase your edge. So hopefully that makes sense. If you have any questions about this, let us know. Talk to you soon.